All right, you are looking live at the Nasdaq, which had another good day today, up by 98 points or 0.66%, and closed above 15,000 for the first time since January 6th of 2022. So it's been almost 2 years since it's been to these levels. I guess I could backdate it, right? I could backdate it to 22, and if you don't believe me, there it is. January 6th of 2022. It closed, there's the 5th, it closed at 15,080, and on January 7th, 14,935. So it's been nearly 2 years. What I wanted to point out here is, yes, it closed above 15,000. That's great. The volume's up. This is, some people want to call it a melt up or whatever, but it's just, this is textbook stuff. If you look at the weekly chart, I've keep showing you this, and it's not going to change. This is a nice cup with handle pattern with the three waves down, textbook handle here, bouncing off of moving averages, now ripping higher. How high can it go? Nobody knows. That's the beautiful thing about the stock market. You might have people tell you they think they know, but they don't. And so we just play it one day at a time. And so for today, it looks pretty darn good. I will say, the index is now 8.5% above its 50, 4% above its 21. When it got last summer in June, it got 10%, 10.1% above the 50 and 5.2% above. And then it pulled back in and then ripped higher and got back, 8.5% above its 50. So, no two times are alike, so we're just gonna have to take it one day at a time. Definitely, though, there's some big institutions. Look at these big blue bars, which we did not have here in the summertime. So this is institutional sponsorship coming in, believing that the rates are going to be cut at least 3 times, I guess, in 2024. But we just take it one day at a time, and so it's made a new high since January 6th of 2022. So those are all good things. I got to show you the Dow Jones Industrial Average, because this is the index that's making new highs, and that's 37,557 where it closed today. Obviously, this is only 30 stocks, in Apple, Microsoft, Boeing, Home Depot, they've been ripping higher. So it stands to reason that a lot of these well-capitalized companies that pay dividends are doing well. So read into that what you will. I will not. Because I don't really buy those stocks. I'm a trend trader, and I like growth stocks, and I think growth stocks are going to do well. This is the S&P 500, pretty much like the Nasdaq, where it made a high it hadn't seen since in a long time, but it was up 27 points today, nearly 0.6%. They're not getting the volume here that the Nasdaq is, so that's one thing to look at. And then the Russell 2000 was the outperformer today. Finally got above this 2003 that we talked about here. It went up above there and then had an inside day yesterday. It pulled back a little bit and now blasted higher today. This is a very good sign for the small cap, which I'm partial to in 2024. I heard Dan Ives at Wedbush talk about 2024 is going to be the year of AI, and Apple and Microsoft and Google and NVDA and Tesla. Well, heck, that was 2023, and that's not going to happen again. I mean, rarely. Of course it could. Anything can happen in the stock market, but that was 2023. I'm looking at more smaller cap stocks, mid cap stocks for 2024. I'm going to get to that probably by year end. I don't own any of these Mag 7 stocks. I'm looking for the smaller stocks, some retail, some biotech, maybe even some financials and energy, just some smaller names. I think these guys, I'm looking to hit home runs and grand slams, and these things are not going to double. NVIDIA is not going to do what it did last year. It's up 250% or whatever. I mean, it would be like over $2 trillion market cap. It's just not going to happen. I'm sorry. You just can't expect it. Sure, it might happen. It could happen, but we're dealing with probabilities here, and it's probably not going to happen for the Mag 7. You got to think a little differently anyway. I'll get to that a little later, probably around the new year. Apple, pulled back yesterday on the China news, bounced a little bit today. Something about their watches are going to be recalled, or they're trying to create demand. Anyway, probably a lot of Christmas gifts for Apple. It's fine. Microsoft, again, just trading sideways. It's fine. Amazon had that 3 weeks tight pattern and now trading higher. There you see it on the weekly. These are set up to move higher. I mean, these are all set up in bases. So I would expect the Nasdaq to trade higher in the S&P, because these are the bigger cap stocks. And yeah, they might go up 10 or 12% and break out of a base, and Google might, run up to 150 or 160. Because they're set up in bases. And this one was trading below its 50 now. Trading up near that buy point of 139. So these all look good. Meta, I know Meta had a pretty good day today. Broke above that old 342.92. This one looks really good. NVIDIA, no, I'll go to Tesla first. Tesla's another one that looks really good. Had an inside day today, I believe. Yeah. And the moving averages are trending up. You could see the double bottom base pattern. That one looks good as well. And I did mention NVIDIA. I'm not going to do the semiconductors today. I'm going a different route. And NVIDIA, was up a lot yesterday and pulled back today. So what was it up? $14 yesterday, GEV4 back today. And it was up 12 yesterday, GEV4 back today. So 3 steps forward, 1 step back. I think we'll all take that. Anyway, I'm going to take a different route today. I talked about the semiconductors every day. So I'm going to go to energy. Enphase talked about laying off 10% of their workers, and the stock was rewarded, even though the employees aren't. This one looks like it's made a bottom here at 73, and now filled the gap here, which was at the low was 115. Now it's just got this resistance here at the 200, but this looks pretty good here to me. The 132 level, I mean, it's right there. This looks pretty good in a stage 1 base here. And if you look at the weekly on Enphase, this thing has been taking a beating, and you can see the looks like capitulation selling here. Big selling makes a bottom, now starting to rebound. So if you like that kind of thing, Enphase looks pretty good. Sting is another oil and gas, energy, transportation, pipeline stock. This one looks really good on the weekly chart. You can see the big cup with handle pattern. Had the 3 weeks tight, then sold off, which formed the handle. And now it's breaking out. So Scorpion Tankers, STNG, Sting is the ticker symbol. That one looks good. LPG, this is one that I have on the leader list. Pull back below its 21, now rallying again. I like that undercut and rallies, shakes people out, and then the buyers come in. See the big blue volume bars, it's been up like 6 days in a row. So LPG looks pretty good. FRO, this is a transportation pipeline as well, just forming a base here. Looks like a little double bottom in this little pullback period. So that looks pretty good here. For Frontline, that's FRO. SUN, Sun, the ticker symbol is Sunoco. It's a refiner making new highs today. You got to respect these new highs. These are up on volume. It showed up on my screen a couple days ago, up on volume, but these things are powering higher, so don't ignore the energy stocks. These ones are making noise. This is an energy solar stock, a Sunrun. You could see the up on volume here last week, and then it pulled back a little bit, now up on volume again today. So Sunrun looking good. And then the last one is Tidewater, which is a oil and gas field services stock. And this one, just consolidating in a base. Definitely energy stock, so don't forget about them. They had a rough year. They sold off a lot, but they're starting to show up in my screens with volume. So I want to get to the leisure booking travel stocks, because the consumers is strong. People are spending their money, they're traveling, and these stocks are strong. This is Trip Advisor, TRIP, obviously made a bottom here, trying to emerge from a stage 1 base. I mean, you're not going to get it at 14 again. It's now at 21. So you have a 50% move off the lows, which we'll take all the time, right? Our job is to make money, not to, we're not here for style points. and Trip is making people money. Booking, you can see this one broke out, long consolidation, broke out, now just trending higher. So that one looks good. CCL, Carnival Cruise Lines, just in a base. I believe I had that on our watch list this week. I'm not sure. If not, it will be pulled back to the 10 and bounced a little bit, nearly 2% today. Carnival looks pretty good as well. And then Netflix, the ultimate leisure services. People stay home, and I'm going to watch the Mark Wahlberg Family Plan movie I think that's on Apple actually. Anyway, Netflix doing well. This is a king of streaming. Just setting up in a base here. I have this on our ready list. I like the pullback here to the 21 and then bouncing, finding support, and now it's emerging from this base here. So Netflix looks good as well. So I have energy, the leisure services. I got to go to the drug stocks. I'm going to give you a couple of different drugs. This is KVUE, which is a spinoff from Johnson & Johnson. An IPO, obviously going through its due diligence phase here, and made a bottom there at 17 and looks pretty good. That's KVUE, KVUE. TWST. Some of these Cathie Wood ARC stocks are really performing well now. This one made a bottom at 14, is now at 38. So it's really participating in this run up. This is a nice stage one base here. It emerged last week and now follows through this week, 10%, right? Last week was a 28% move and another 10, almost 11% this week in the first 2 days. So TWST looking good. Okay, TXG is another one. I believe this is a Cathie Wood stock. I don't follow her that much, but this is her style. And yeah, it gets a million shares, a million share traded a day, average daily volume at 57. That's 57 million. That's decent enough dollar volume average. This is not an earnings and sales growth play. This is a speculative play, medical product stock. But you can see it's trying to emerge from this stage one base. So these are just ones to think about for 2024. If you don't want to play the Mag 7, I've got a bunch of these biotechs, retail, financials, drugs that I think might look good for next year. I'll share them with you at my site here. This is day one pharma, biopharma, DAWN. You can see it's trying to emerge from this stage one base. I like it above the 200, and now it's got to get above the 1536, but that one looks good as well. EXEL, Excelis, another biotech stock. This one was in a base and now broke out. So, you snooze, you lose. This one's gone. It's up on volume here the last couple of sessions. I think this was Friday when it was up on volume. And I put it on my radar, and it had an inside day on Monday and now blasted 2% today. So we'll take that every time. TGTX is one that I do own. It's one of my spec plays. I believe it's going to close that gap there at 1956. Now it's just like 80 cents away. So just grinding higher with its moving averages. And this one is not so much a spec in that they do have sales and they're going to have earnings in 2024. So we'll just see how they do at their next earnings report. Anyway, that's it for the drugs, biotechs. I got to go to some retail. I'm going to go off the beaten path here with a couple of them. CHWY's had a lot of insider buying here. So when you see insider buying, they know a lot better than anybody else what they have in store. And this is a stage one base there with the 2164 buy area, and it's already past that, up 12.5% this week. So CHWY is on the move. Etsy is another one. This is a 2020 darling. Looks like it's just carving out this bottoming pattern here now above the 200, it was up on volume the last couple of days. So Etsy's definitely one to watch. It's up by 7.87% this week. So Etsy, I just put it on there to keep in your mind sight. A couple other shoe stocks, Skechers making new highs today. I mean, you can't argue with that. And Steve Madden making new highs. Now Nike reports earnings on Thursday after the bell. So it's definitely going to impact these smaller stocks. Deckers has an 18 billion market cap. I sold this one around 700 and it pulled back 688. I thought I was a genius. All I did is pull back to its 10 and trade higher. It's just when I get a 25% profit on a stock, I get a little nervous. That's about enough. And so I just switched into ELF. I had a smaller position in ELF around 110, so I wanted to buy more, and ELF is looking darn good. I did trim some today because it's getting big in my portfolio. You could see this, we got in about 110, 112, and then it just, it's up 40 something percent from there, you know. So it took some off, but still have a really nice size position. And if it does pull back to that 10 EMA, which I'm hoping it does, but if it doesn't, that's fine. If it wants to run, it's going to do what it wants to do. But I'd rather have something coming out of a base like this than owning something that's just in, this one's in the star land. It's in la la land. I mean, it's a nice trend, and pull back to the 10 a couple times and got support, but I like bases. I would rather buy out of a base and just sell aggressively, and if it goes higher, great. It doesn't bother me. This is why selling is personal, because some people, it really bothers them if they sell and this thing goes up to 800. Oh, I missed it, and they just cry in their beer. But you know what, it just confirms that you had a great stock and you're a good stock picker. But I would just rather own something in a base. And ELF, as I shown, it hadn't had a base in a long time. Now it makes this base. So this really interests me, because if it does something like this again, that's a home run. That's a grand slam, in fact. But I like both stocks. It's just, I just made the switch. So there you go. Anyway, that's enough for the retail stocks. I could do retail all day because there's a lot of them doing really well. Cybersecurity, I'm going to go someplace a little different today since it's Cybersecurity Day. We're going to go to CyberArk software, and this one broke out of a base and is just trending higher. Real strong stock. Fortinet is one that was put in timeout due to a couple of earnings. Whoopsie, twice, and now it's traded above its moving average, and you can see the 10 is trading above the 50. So these short-term averages are starting to turn up. So it's trying to carve its way out of a stage 1 base. So Fortinet looks okay to me. Sentinel-1, this is just one that just won't back down. It's a Tom Petty stock. Just keeps grinding higher. I mean, what can you say? I was hoping that it would pull back, but sometimes you just got to let them go. Like Mick Jagger says, they come and go like streetcars. So we'll catch the next one. Zscaler is one that I do own. I don't see any sell signs. The only thing is it's starting to get a little big in my portfolio. So I'm gonna have to watch that. And CrowdStrike, I did sell a little bit, not because it pulled back. It's just you could see from 160 to 250. That's a big move. And like I said, I get a little nervous. So I'll just trim a little bit. When you say trim, if I have 100 shares, I'll sell 25 and go buy some Christmas presents or buy my dog a bone, whatever. Anyway, that's it for the cybersecurity stocks. Software, gonna take a couple different stocks that I normally don't provide. This is a software financial stock, broke out and then pulled back right to its buy area there at 95 and then moved again. So okay, sometimes they break out and pull back and fail, and sometimes they break out, pull back, and rip higher. In this market, the bias is to the upside. We're on a real strong uptrend, and so that's why you kind of have to let your stocks work a little bit, even if you buy them and they pull back a little bit. Try to allow them to work and don't put your stops too tight, because then you get stopped out and it rips higher. And if you're one of those people who cry in their beer, you're going to be crying that you lost your stock. They stole it from you. Another software stock that I like is MNDY Monday. Had a great day on Monday, pull back on Tuesday. So we'll see what it does the rest of the week. But you can see it just set up in this pretty long base here. And the longer the base, the higher in space. That's 21 weeks there of consolidation. And prior to that, it was 13 weeks. So this has been a long time, that Monday had this 3 weeks tight, then pull back in the last 2 weeks. Looks pretty good to me. I don't own it, but it does look good to me. Datadog is another one that I really like. I like, the sales and the earnings and the chart pattern. So the fundamentals and the technicals look good here on Datadog. Talk about a big base. This one is going back to August of 2022. So we're looking at about a 16-month cup with handle pattern. And now it's getting right back up to that 118.02 standard buy point, which is the high in the handle there. So to me, Datadog still looks actionable. Looks pretty darn good. The housing, BCH, I put this on my ready list and people are going, what the hell's wrong with you? It just got a heavy short interest. Sometimes people, say they want lower price stock. So I try to find something for everybody, lower price, high price. Chipotle Mexican Grill's $2,300. People don't want to buy it. You want to buy Beazer Homes for $30, that's fine. It was up 5% today. I like the cup shape pattern, they're earning money. I mean, they've got the fundamentals, PE is 6. I don't buy stocks for PEs, but this is not an expensive stock. It's just got a heavy short interest. So, any good news could fuel a nice little rally in that one. MHO, this one just keeps making new highs. It broke out, then pulled back to the 10 one time, ran up, pulled back to the 10, ran up, which reminds me of another stock I'll show in a second. Taylor Morrison Homes, this one looks good too. I could put this one on our ready list. Made the move, from this 10 EMA blasted higher. Speaking of which, a firm has a real consistent pattern here where it breaks out from the 10 here and rips higher, pulls back to the 10, rips higher and then pulls back to the 10, then rips higher. So you just wait for the 10, you got to be patient. You got to watch these things. And then you got to strike like a cobra. You got to be quick. This thing is not waiting around. So you get a little bit of news and it sparks a little rally. And that's it for me today. Thank you for watching. So for I lied, I have one more thing. FedEx spit the bit this afternoon. It's down 8%. I don't know about their management here with, I think UPS might be eating their lunch a little bit. Their main thing is, yeah, they missed on the top and bottom line, but they talked about they're unsure about the consumer in 2024, about demand, blah, blah, blah. So it could be the CEO is just kind of trying to throw cold water on their stock, which is at a high here. So, let it pull back. We'll see where it comes in here. It's what, a 257 after hours. So, I don't know how much is going to come back there. Got that 260 there, which is just below the 21. Maybe it'll pull back to the 50. We just got to wait and see. But anyway, it was not a good report. And he was even weaker on the guide. So, you do that. This is good to see. Bad news gets hammered. Good news gets rewarded. And anyway, thank you for watching. We're definitely in a bullish uptrend. I do tell, I like to trim, I say trim like a Thanksgiving turkey, because when you trim, you just trim slices, right? You don't cut the thing in half. You just trim slices and, because I like to have cash in case I see an opportunity that I like and I want to be able to jump on it and not be fully, 100% invested and 100% on margin and not be able to buy anything that I like. So I always like to have a little cash. So I did trim some CrowdStrike and a little bit of the Alpha today. So anyway, that's enough of me. Thank you for watching. I'll be back tomorrow and at mcstockcharts.com. We never give up.